Gotta move. Gotta move. Gotta move.
Welcome back. Stockwell Eldridge Show. Every Sunday, 10 a.m. here on AM 1280 The Patriot. Thanks so much for Nate Nelson on the last segment about taxes. If you missed it, go to Facebook and go to the Stockwell Eldridge Show. You can go to YouTube and see it there, and you can see Nate. Nate is dressed, I must say. Well, no offense, John. I think Nate is the best dressed in the house, in this room today. So, Nate.
And he gave some really good recommendations for charitable donations.
Yes.
Yes.
Of people.
And gifting. So
Yeah,
if you missed that,
gifting.
you can actually gift up to 28 grand if you're a married couple. So if you need anybody to gift to, you can contact Stephanie as well.
Thank you. I'm part of some nonprofits. I could help you disperse
I accept
it.
gifts too, Jason.
Oh, that's all you okay.
Let's just all share the love here. What the heck, right?
So my question on taxes is I always wonder, it'd be so nice to get it to be simpler and easier. And I understand, obviously, people say that about real estate. They probably say it about mortgages. And obviously, you need expert advice. So if you're a normal individual, I shouldn't say normal, if you're an individual who doesn't love doing taxes or isn't good at that part, or if you're a business owner, like a lot of business owners and small business owners that I know, it's not something that I personally like to dive into or even go to. You gotta have that outsourced out to a professional because you're probably missing something, or you may be doing something wrong, or frankly, you could be wasting time on it because you could be doing your business instead of trying to figure out your taxes.
As a W-2 employee, I've had an accountant do my taxes always, and he's always asking me all these questions. I think, I didn't know that. I mean, volunteering hours and mileage to
there's a lot
volunteer
of
events
stuff, and you
can
you go to experts like Nate. Nate's information will be on our Facebook page and on our website as well, because it will help you and you'll learn stuff and then plan ahead. We always talk about that. Plan ahead. It's so hard to do, but plan ahead with your taxes and also with your estate things.
Jason, with the complexity you point out, though, how come is it whenever my clients sign a will, they always say, "Oh my goodness, this is more difficult than buying a house"? Why do they always equate it to buying a house with all the signatures?
Yes, there's a lot of signatures and buying. Yeah, so we have the same thing. People say, it could be a lot easier buying a home, but then we have paperwork after paperwork after paperwork.
doing a mortgage, yeah.
So
Yeah.
So even though you get, certain politicians and certain people saying, let's just simplify and make it a one-page postcard taxes for people. It's like probably never going to happen because there's just so much. They're so complicated. It's so different for every single person and every single business that it'd be hard to.
Well, you want to go to an expert. I mean, if you need to have knee surgery, don't go see your ophthalmologist. I mean, you go because he's a doctor,
And Stephanie, pointing out to what you were saying, though, I've been doing it this way for so long, to some degree, missing a deduction or missing a technique is kind of like practicing a golf swing wrong. The more you practice, you're just still practicing the wrong golf swing. So a checkup every now and then can go a long ways.
Well, and I would imagine tax laws, like you said, certain tax laws change. I mean, right, and certain.
All the time, I think there's rules that change in that.
But I think just the tips you shared, and I think you said you had some other kind of checklist items you wanted to share with us. But just knowing those little, like I would have never thought about, like you said, about the 401k deduction and all that kind of stuff. Shoot, for 1-2 months, why not?
Max it out, I would say. And then so I want to get to John because I Vanquish AP with properties and rentals. And John, here's my question. And maybe Nate can help with this or too. But so Donald Trump didn't pay taxes for X number of years because of real estate holdings, which as realtors we know, I love real estate. Dawn loves we all love real estate.
Right.
Great opportunity for living in. Obviously, you love your house and you need a place to stay, but also as an investment tool, it's a very, very good investment tool if it's done properly. And you can also use the tax codes to your advantage and have a lot of depreciation and all kinds of other write-offs that will help you lower your tax liability. So from a property management company standpoint, what are some things that some people can do besides, number one, buy a rental property, I guess, but after that, what else are some of the stuff they got to watch out for at the end of the year here?
Yeah, good question. Actually, I wanted to tie that into what Nate was saying is I did have a question for him that if you do have a business and you're showing a profit at the end of the year, but you also own some rental property. My thought went to this exactly, which, well, if it's a large property and you're able to write down quite a bit of depreciation, and you sell a business right now and it's for profit, but you say if you sell it now, you have 15 months to kind of keep that capital, but can't you also take that depreciation of if you own a big building and write that off from against your capital gains and selling a business like that?
That's a great question. And I think the full explanation of that technique would be a little bit beyond the scope of this show.
Sure.
But Jason, one of the great parts about being a closely held business owner is if you separate your passive investment companies with your active investment companies, sometimes you're able to utilize losses for your real estate. Your real estate investments and holdings against some of the active holdings that you may have in income-producing companies.
Sure. That's kind of what I thought, too. So getting back kind of your question is, I think that's a great reason why there is so much, investment property out there is because people do realize that have a big income or do own other businesses why they should own rental property, and it's because of the tax advantages. The cash flow is great if you can buy them good, but the depreciation and other business expenses that you can write off is kind of really where you can make up a lot of ground with taxes, and that's with depreciation and things like that. So, I mean, if you have a 12-unit building, you're talking of tens of thousands of dollars a year that are just gone because you can write that into the depreciation of the property.
And that comes up, and that's the thing that Donald Trump got so much heat for, I believe, is because of that. But I would say too is that no matter what when people go in to buy, when you go in to look at an investment property or to purchase an investment property, so many people will factor in that the property is bought at X price, and in 5 years it's going to be X times a factor or X plus a factor. So they think they're going to. I always recommend buy it as if it's going to never make a dime on appreciation.
Yeah.
Right. I mean,
100%. That's just icing.
That's exactly.
On the
That's
cake.
the gravy that you get at the end.
It's the gravy, but you should never buy a property with the anticipation that it's going to go up 5% in value every single year.
Even if you're super smart and you know that you're buying it at a price where just base your numbers off of
your cap rates, what you're buying it for, and what you're going to be able to. I mean, what you're going to be able to get in rent. It's, like any business, cash flow is king, right?
Yep,
Cash
gotta have
is king.
cash flow. Yep.
And that's the same with real estate. You need to have the cash at the end of the month to be able to do things. You need to be able to put money back into the property. You need to make sure that there's a cushion there, and obviously you own it for a reason, so you want to be able to have some cash at the end of the month too to be able to use. So,
and if you're a landlord and you have rental property, or let's say you're one of those, what do they call them, default or not by choice landlords. Let's say you had a house and you couldn't sell it, so you just rented it out and then you bought another one.
That's me.
Yeah, but you're happy with it now, right? It's a good thing.
Yeah, well, I was fortunate. I actually got to do a loan mod on my duplex. And now it finally does cash flow, but I was paying in
You were
like
losing for a while.
$150 a month for
See, folks, it even
years.
happens to realtors.
Yeah.
We're not immune to the market. We didn't, and Katie and I, we have a property that same thing. We feed it, every month we have to pay extra into it. But what are some of the things that we should be thinking about as the property owners at the end of the year that I know that you guys take care of for me, and other clients, but you said something about the property 1098s. I think there's a CRP form or something with taxes that they give a credit back to tenants and stuff like that.
Well, I think every situation's different, but if your properties are making money, I would suggest maybe taking a closer look at them and seeing what you might be able to purchase now to write off to lower your taxes for the next year, such as new appliances or new windows or roof or furnace or any of these number of things that if
Capital improvements,
if you know that your furnace needs to be replaced in the next year probably, and you had a really, really good, strong year this year, maybe you want to think about replacing that furnace now, being able to write it off. So those types of things are very good to do.
Are there any advantages as far as renting to sign in January, February? Any specials or reasons why somebody would want to get into rentals in the first part of the year versus the last half of the year?
I think it's the same with buying or selling. When do people move? It's springtime. Later in the summer, we get a little bit more of a pop. But your springtime is really where you want to be. So, yeah, if you are looking to buy a property, I'd say start looking
buy it now. Yeah.
Yeah, start looking now.
We always say buy now, right, Don? No,
Oh yeah,
Like right now.
and sell now.
But
but you could have it ready for.
yeah, I
spring
mean, to
if it
find a
needs
good
repairs.
investment, you're
Yeah.
gonna look at probably 100 different deals, and that takes a lot of time to
Yeah.
find the right one, the one that cash flow and really does a really nice job for you. So you want to start now, go through all those, buy in the next few months, and you're gonna have a renter in the spring.
Yeah. Great tips. We'll be
Good
back
stuff.
with more. Thanks for listening. Stay tuned.